Hey, everybody. Welcome to Coffee and Contracts. I am your host, Rusty Whitten, and I am super excited about today's episode because today's episode is all about the nuts and bolts that kind of gets the project moving. You know, financing is one of the biggest hurdles doctors face when they're trying to get their practices up off the ground. Who do we go with? Where do we start? Am I doing conventional, SBA? Am I self-funding? What does that look like? And most doctors understand that they need a loan. They just don't understand what kind of loan. And they understand residential loans, but that's vastly different than commercial loans. So I've got an expert here with me today in Chandler Wrightenberry of Live Oak Bank. Super excited to talk with you today, Chandler. How's it going, buddy?
It's going great. Thank you for having me, Rusty. Excited to talk about this.
Yeah, man. So Chandler, you're in Wilmington, North Carolina. Is that right?
That's correct. Down here by the beach, Wilmington, North Carolina. Been here for the last 12 years.
One of my favorite cities in the world. I used to live just south of there. We talked about that in Myrtle Beach. And any chance I got to come up to Wilmington and hit the beer scene, hit the food scene, go to the beach there at Wrightsville, like eating Topsail Island, like all that area is just it. That's incredible country up there. And so if y'all are listening, you've never been to Wilmington, you got to get up there and check it out.
I agree. I love it. It's a great place to live. You got the beach. Like you just said, you got great food. And been here for the last 12 years, and the growth that has happened here in Wilmington, North Carolina, it's pretty remarkable.
Yeah, for sure. This is ironic. I've got another guest on the show, my former boss at Option Rehab, Brandon Adams, who lives in Wilmington, North Carolina. Okay. He's in another episode here on the show. So I'm double dipping in Wilmington, I guess. It's like there's a theme here, apparently.
It's a good place to be. It's a good place to be.
Absolutely. So tell us a little bit about your background with Live Oak and who Live Oak is and what kind of products y'all typically offer.
Yeah, absolutely. So I've been here at Live Oak Bank for 12 years now. So graduated college and came down here to Wilmington, North Carolina when the bank was about $100 million in assets. We were not publicly traded, and I was about the 100th employee. And so flash forward to today, we're in 40 different industries, healthcare being one of them, and about a $15 billion asset bank that lends nationwide. Okay, so we're a little bit different compared to other banks, the traditional bank that most people would probably think about. When you think about a traditional bank, you think about you have branches on every single corner. You put your deposits there. They send their deposits to the hub downtown, and then they relend that money back out within the community. So here at Live Oak Bank, when we got started up in 2008, our original founders were like, "Hey, let's rethink this. Let's be a tech bank." And so we have a beautiful campus down here in Wilmington, North Carolina. We don't have any branches or tellers, but we lend money nationwide. And so we raise all of our money online via checking accounts, savings, CDs. And so, like I said, that has lent very well, and organic growth to a $15 billion asset bank since 2008. And so when we started up in 2008, we were originally going to only lend to veterinarians. So another vertical that you guys work with, Rusty. And so our founders said, "Hey, okay, where else can we go? And where else can we lend with SBA dollars that make sense and have low default rate?" And so there's 1,100 industries in which you can lend to under the SBA. And so our healthcare team got started in 2010. And so we've been in business for 16 years in the healthcare space, primarily dental. I would say probably 85 to 90% of our portfolio is dental related, but the other 15% you can think is medical. So anything optometry, dermatology, plastic surgery, we've done it all. And so since that time, we've lent about $3.5 billion to the healthcare industry and do about $300 to $400 million of projects a year. And our big focus here at Live Oak Bank and our healthcare team is commercial real estate. And so that's why we're talking today.
Yeah, absolutely. I appreciate that, man. And you are specifically on the medical team, which is why we're bringing you in here today to talk through this. And what better expert than somebody who is a part of a team that focuses so heavily on healthcare and healthcare lending. Chandler and I are working a couple projects together. I'm excited to see those get to the finish line so we can help these doctors get up and rolling. And so, Chandler, I guess we'll just go ahead and dive in. We'll start there. Like a doctor, a dentist is thinking about opening their own practice. What are the first things that come to your mind when that credit application or that loan application hits your desk? You've got that person in front of you. What are the first steps, or what are some of the basic things that start happening behind the scenes?
Yeah. So, I mean, when we're having a conversation uh, for a first-time doctor that's looking to open and hang their own shingle, there are three big things that come to mind from a banking perspective to get that client ready or what they should be thinking about. And so, a lot of these are, kind of knowns, uh, but you kind of got to speak about them, right? And so, the first one is obviously personal credit. All right, we got to have a healthy personal credit score. So, the way that you have a healthy personal credit score, I think 700 and above is good. But, you want to have limited debts. We understand that there's going to be student debt loans out there. That's okay. You had to take that journey to get where you are today to invest in yourself. So that's okay. Credit card debt. We want to keep that to a minimum, right? You can have a better credit score if you have lower utilization. Okay. So if I'm a banker and I'm getting an application and the first thing I see is, hey, they got a $50,000 credit card utilization and they use 49,000, not great. Let's keep that balance down. Okay. And then we understand that, right? You have a family, you got a home, you got to have some cars that you got to drive. But as long as that personal credit is manageable and the debt load is manageable, that's a good thing, right? And so that's what you should be striving for. So that's the first thing that we look at personal credit. The second thing is let's try to save some cash. Let's try to be physically responsible. A lot of these doctors, whether you're just coming out of school and it's, you're 2 years or 3 years into this, or doctors that we've worked with that have been 8 or 9 or 10 years into this and already have successful practices. We want to see that you have physical responsibility. So the money that you have been making is translating to paying down your personal debts or going to your personal financial statement, right? So you're building up some assets. So saving a little bit of cash, right? We understand that it might not be a ton up front, but anything that you can put away, that's going to be better for a banking application. Retirement accounts. And like I said, paying down mortgage debt, building a personal financial statement and showing that the money that you've been making over the last couple of years, or like I just said, over the last 8 or 10 years, that's going to be super important and vital, right? We want to see physical responsibility. And then the second thing, I think there's kind of two things that we can talk about. So the first one is like, hey, if somebody's starting up, right? That's a little bit different application of what we're looking at compared to an existing doctor that's operating and wanted to do a project. But if you're starting up production, right, that's a huge thing that a bank is going to look at. So, hey, on a first call that I'm having with these doctors and you're wanting to do a startup, hey, what's your production? What have you been producing over the last 2 or 3 years? Okay. And what can that translate into to be able to support a loan, right? Can that support a $500,000 loan? Can that support a $750,000 loan? Or can that support a $1.5 million loan? Maybe this person wants to go out and buy commercial real estate to start out. And guess what? They have the production records to support that type of project. And so obviously, the higher the production, most likely the more that you're going to be able to borrow on our side. So those are three big things that I think we look at. And like I said, we could look at it two ways from a production standpoint. And then if you have an established practice, it goes to cash flow, right? We lend on cash flow. We lend on how much money that you're making, right? Revenue growth, but bottom line profitability. So if you can enhance that profitability, that's going to help out. So those are the biggest three things that we look at from a banking standpoint. I would say high level when you're starting to look at an opportunity.
Yeah, perfect. So you've talked about individual doctor and the practice, kind of how those weigh. But what exactly are you underwriting? Are you underwriting more like the practice and the assets, the personal guarantees, which we'll get to more here in a minute? Like what is being underwritten when they're going through this process?
Yeah, so I think we can kind of go back to what we just spoke about, and so we can kind of look at this two ways. And so, here at Live Oak Bank, we do specialize in commercial real estate lending for doctors. But if there's a doctor that's been 2 or 3 years out of school and saying, hey, I want to start up my own practice, but I don't have enough capital to put down to be able to buy that commercial real estate. We have solutions for that. We can figure that out. But a lot of doctors decide maybe to go the leasehold route. And there's a ton of banks out there that finance that space, and they do a really, really good job at it. And so we don't play in that space as much. But what I would say is kind of goes back is what we're looking at is like, hey, how much are you producing? at least on the startup side, that's the biggest thing. How much are you producing, and can you max out your production? And that's going to lend well to be able to get a loan. And, if you're going the leasehold route, there's a ton of other banks that are able to do that, participate in that. Absolutely. But I think I'm a little bit biased because we do a lot of real estate here. If you can own from the beginning, I think that's great. And you should be able to do it, right? You can build wealth over time. And so if you're an established business, what are we looking at? It's the cash flow, right? Just kind of what we spoke about. And so maximizing that profitability is going to bode well to be able to borrow $3 million to $2 million that you may need to take on that project, to relocate, right? Buy that building, remodel it. Some of the projects that we're working on right now.
Yeah, exactly. And owner-occupied real estate, especially for medical practice, is hard to beat, right? Where you own the practice, you can pay yourself rent out of it as the landlord of your building, especially if you can expand a little bit and have somebody else in there with you. That's a great way to start early at building long-term wealth. You're in the financing world. You understand. You talked about this already. Starting early, right? Getting that fiscal health as healthy as possible from a savings standpoint, a low debt standpoint, to where you're building wealth early. A lot of kids coming right out of school, and I feel like an old man saying that, right? Kids coming out of school these days.
Right.
But people coming out of school these days think, oh, I've got to go associate for X number of years, or I need to go work for a DSO or an established practice before I'm able to step into practice ownership. And that's not necessarily the case. I mean, you can speak to this. Medical practices, dental practices are some of the best leveraging items you can have for, loans, for building a practice, for owning your own real estate, because there's just so much potential there. Because typically medical practices don't fault. They don't go into default. They pay their bills, they pay them on time, and they're super profitable, right, Chandler? So I think that looking at that early in your practice is a healthy way to look at long-term wealth building, wouldn't you say?
Yeah, I would agree with that 100%. It's like taking a chance on yourself, right? And I think there is, going out there and associating and getting experience, and getting that track record and showing that you can do it. But then it's time to hang your own shingle and take that chance on yourself. And like you just said, starting early and building that long-term wealth, right? The way that I like to think about it too, and just illustrate it, is like, if you're buying commercial real estate early, this is a 25 to 35 year investment.
Right.
Don't think about it right now. There's a lot of things that are going to happen over the next 25 or 35 years. Or there's something that's going to happen in the next month or two. You can't control that. Control what you can control. When you extrapolate that over 25 or 30 years, think about the appreciation that you get. Right. Think about the pay down of the debt that you're getting. After 25 or 30 years, you might have a free and clear asset. And there's no telling what that's going to be worth in that time. And like you said, it's a low default industry. We've done about $3.5 billion, like I said, to the healthcare industry, and our default rate is spectacular. And so that just goes to show you that these things perform very, very well. And so take a chance on yourself in a very super safe industry.
And you kind of already have when you go through this process, right? You've gone through undergrad, you've gone through 3, 4, sometimes more years of postgraduate training. When you factor in residency and fellowship and whatever else gets you to that finish line, you've already bet on yourself. Why would you stop there? Like you said, going and getting some experience as an associate somewhere is invaluable when you get with the right seasoned doc. But there's also something to be said about just saying, hey, you know what? I'm an American. I'm gonna pull myself up on my bootstraps and figure it out, right? And go chase the American dream myself. There's something to be said about figuring it out. And there's obviously pros and cons either way, but having a bank like Live Oak in your back pocket and in your corner is super helpful for that. Particularly when we start looking at the nuts and bolts of lending, Chandler. We'll kind of dive in here a little bit more. You've mentioned SBA a few times. Why don't you just go ahead and kind of talk through what SBA means to y'all and what that SBA program is? We'll start there, and then we can kind of drill down a little bit.
Certainly, yeah. So the SBA, Small Business Administration, that program has been around since the 50s. I think Eisenhower introduced it. And so it was a program introduced by the federal government to be able to get capital into small businesses' hands quicker, right? And so I think there's 30 plus billion small businesses today. And so the idea behind it is that, hey, the federal government was going to come out and they were going to say, hey, we are going to backstop this loan 75% if any bank will go and take advantage of this. So now there's a 500-page standing operating procedure in which we have to follow. But what happens is now you put the responsibility on the banks, but usually they are able to get the capital out quicker, right?
Mm-hmm.
If you're working with the federal government, it's probably going to be a little bit slow and bureaucratic. So let's lend it out to the banks. And so that
Sure.
program, like I said, was established in the 50s. There's 1,100 industries in which you can lend into. 75% guarantee on those. And that program usually lends, I want to say, about 35 billion a year across the country.
Wow.
And so with that 75% guarantee that is provided to the banks that are lending, I'll bet Live Oak Bank being one of them, it comes with more flexible terms. So lower down payments, right? Longer amortizations, smaller prepayment penalties, right? So there's some flexibility to the SBA program. I think it can be an amazing fit for certain types of projects. So here at Live Oak Bank, we are the nation's #1 SBA lender by volume. I think we've been that for the last 6 or 7 years. We've taken an approach of where we are focusing on SBA first type transactions. Instead of most banks usually follow traditional or conventional lending and then they go to SBA. So we've kind of flipped it upside down. Does that help? So that's kind of, at a high level what the SBA program is, and it's alive and well.
Yeah, absolutely. So, and they come up a lot for doctors, especially newer doctors. What situations do SBA loans typically make the most sense, and who are they mostly targeting?
Yeah, so when I'm having a first conversation with a doctor, I like to break it down in like 2 schools of thought. There's traditional lending, conventional lending, and government guaranteed lending, pretty much SBA lending. And so, if you are a doctor that is just out of school and has over 2 or 3 years practicing an associate and wanting to hang your own shingle, obviously there's the route of acquisition. That's great, right? You can go acquire practice. There's lenders out there that do that for 100% financing, do it at great terms, great rates, if that business is cash flowing. So you're already buying a cash flowing asset. Great. SBA usually is not a great fit for that, right? I would say in the acquisition space, it's a secondary fit. Now you're looking to start up. Hey, I'm looking to go do a leasehold facility project. It's going to cost me, $400 or $500 to upfit it. I need 150 of equipment, and I need another 75 to 100 in working capital. That is a really good fit for the traditional conventional lender, right? There's a lot of banks out there that do that, do it really well, do it at really good terms and rates. Now, again, I think SBA would be a secondary fit to that if you cannot get conventional financing in those 2 scenarios. Now, where I feel SBA is a great fit and should lead with is when you have a doctor that's looking to start up and own commercial real estate, because in that situation, you only have to put 10% down. Okay. Where most traditional lenders are wanting you to probably put 25 to 35% down, or maybe not even lending in that space because that's too risky for them. So that can be a good fit if you have the capital to put down. And then secondarily, I think the expansion project, just like what we're working on right now, right? You have a doctor, they've been practicing, they acquired a practice, they've been in that space for, let's just say 3 years now, signed a 5-year lease. Hey, I'm busting at the seams. I acquired this practice. It was kind of second generation. I want to change it, but I don't have the ability to right now, but I have a vision to change it in the future. And so I'm operating out of 4 ops and I need 8, right? That's when the SBA can come in and be a great product fit when that doctor is looking to relocate, buy the commercial real estate, or buy a piece of land and go ground up. And so the reason that is a good fit, 100% up to 100% financing, I should say, longer amortizations up to 25 years to keep your monthly payments low, because that's the most important thing, right? Cash flow is the most important thing in a transition project. So kind of to summarize, I think if you're starting up, you're acquiring, and you want, and startup is going to be the leasehold route, I think there's traditional financing out there that can be really, really, really good fit. It's SBA secondary option, or if we want to go the SBA route, I think it's a really good option if somebody's looking to start up and wants to own their commercial real estate from day one, or that expansion in a larger project. So there's a fit for both financing routes.
Yeah, for sure. And just the whole cash flow model, that's huge for SBA loans, to be able to have that payment a little lower, to be able to get started, to get on your feet, particularly if we're talking about the folks we were mentioning a few minutes ago that are wanting to start a bit more early, right? They want to launch their own practice right out of the gate and not have to associate for a while. Having the flexibility of an SBA loan is super impactful for them in those early days, where they can hit cash positivity and, actually start making a salary and actually be profitable a little bit earlier, instead of having these, you've put all your money into that down payment to get the LTV correct, to where you can get that traditional or conventional financing that you may not qualify for anyway that early in your career. And so SBA makes a great option for people, as you just laid out. So are there any misconceptions or anything about SBA loans that you hear or that you see that you would like to debunk, or that that you see come up often?
Yeah, well, one thing I would like to say is that not all SBA lenders are created equal. So, you know, you are the boots on the ground, Rusty, in Western Tennessee. Like, you are the one that's educating these doctors about what their options are. And so, like I said, SBA lenders are not all created equal. You need to go to somebody, if you're going down the SBA route, that has experience and has done a lot of it. And just to be quite honest with that, because it does get a bad rap of, oh my goodness, I had a friend of a friend who did an SBA loan 10 years ago, and it took 6 months and the fees were high, and I never knew where the process stand, and I was working with the federal government and this and that. It's like, well, that's not exactly true, right? So, you have to have somebody that has experience doing it, because that makes all the difference in the world, because you got to focus on this. So, there's a lot of misconceptions out there. Like you said, it's like, hey, this is going to take me 3 or 4 months to execute on. Well, here at Live Oak Bank, we've turned transactions in 60 to 75 days for commercial real estate purchases. So it can be done. There are fees associated with the loan, but there's the trade-off of the flexibility, of the longer amortizations, the lower down payments. So maybe a little bit higher fee up front that you pay, but that's okay, because you're being provided that flexibility. And then again, any loan that's 15 years or less than 15 years, I should say, has no prepayment penalty, which is kind of crazy, right? Or if you go over 15 years and get that longer amortization for something in commercial real estate, there's only a 3-year prepayment penalty, right? So I feel like the SBA route, and what I tell a lot of my clients is, hey, this is an opportunity to take a product that's going to get you to the next stage of your career, right? Would I love for you to be with Live Oak for 10 years, 15, 20, 25 years? Absolutely. But I understand that's not realistic, right? We want to get you graduated to that more traditional, conventional financing structure later on down the line. And we've helped many clients do that over the last 16 years.
Yeah, I love that. Just being that great launch pad to help people start well. That's so vital in any business, particularly in a healthcare practice. If you want to start, you got to start well in order to set that foundation for a healthy, no pun intended, long-term business and practice with whatever vertical you choose. And so you talk about, we've kind of hit on this a lot earlier, but as we're preparing for an SBA loan, it bears repeating, right? Making sure you're keeping that debt to income low, making sure that you're in a great financial position with some savings, that you're showing you can be responsible, right? That you're responsible with what you're making. You can be responsible with a bigger loan that's going to help you get your practice going. But that kind of goes into a transition of looking at like personal guarantees that come with loans. Personal guarantees often make doctors nervous, right? You're putting your name on the loan. You're personally guaranteeing this for your business. Why? Can you talk about what a personal guarantee is, why it's necessary, and kind of why docs maybe shouldn't be so afraid of that early on?
Yeah. So, a personal guarantee is standard. That's kind of standard across the board. Every loan, at least on the SBA side, is going to have a personal guarantee. And most loans to any small business are going to have a personal guarantee. So it's just standard across the board. And what you're doing is you are signing up for that full debt load. Okay. So if you go out and you borrow $1 million, you're going to be successful. So we're not going to talk about the individual where we have to talk about a personal guarantee. But just in the worst case scenario, there's bumps in the night. Things do happen. You are personally fully liable for that $1 million. Okay. So in a situation of, if things did go awry and you defaulted on the note and there was a liquidation scenario, the first time or most banks are going to first focus on the asset, right? So whether that is the practice asset, can you get rid of it? Or is it the real estate? Can you get rid of that and sell that? And then the equipment, can we sell all of that off? And then what's the deficiency in there? And so that would be where that personal guarantee comes into place.
Sure.
And then you are fully liable for that and the repayment of that. So that is very standard across any small business loan, whether you're doing it through the SBA or whether you're doing it conventionally. Only when you get to being, I probably don't want to say working with private equity, or you are way far upstream, middle market, even higher than that, where you're doing loan transactions, 30, 40, 50, 60, $100 million transactions, that's when personal guarantees drop off. So for the point of this conversation, every loan is going to have a personal guarantee. It's standard. You shouldn't be worried about it, right?
Yeah.
You're betting on yourself and you're going to be successful. So you don't even have to worry about the personal guarantee.
And that's my conversation with them, because it always comes up, am I going to have to put a personal guarantee on this? And well, yeah, you put a personal guarantee on a loan when you purchase a car, when you purchase a home. Like it's a standard thing in the financial world. It shouldn't scare you, because you are taking out a loan on something that actually, that appreciates instead of depreciates, like a vehicle, right? Like you're making more money, you're banking on yourself. It shouldn't be an issue, because you are going into a very healthy, stable field to start your career. So it shouldn't scare you. And so looking at the loan structure, you've mentioned the amortization process. You talked about that a little bit, but how does loan structure affect cash flow in those first couple of years of operations as you're kind of getting the ball rolling on your practice?
Yeah. So, it just depends on what scenario you're in, right? If we are looking to do a startup, right, we're going to want it's going to be a longer ramp period for the third practice, right? Usually that could be anywhere from 6 to 12 months, potentially a little bit longer for you to break even. And so when you're structuring a loan on the startup side, number one, you want to make sure that you have SBA, you can't do sculpted payments, but traditional loans, you can do sculpted payments. So that's something that's super important. On the SBA side, we can do interest only. So matching that amortization of interest only or sculpted payments to where you think you're going to be breaking even or a little bit longer. So with our loans, it's kind of standard. We're probably doing 18 to 24 months of interest only for a start. And so that's super important, because you want those monthly payments to generate and collect that income. And then secondarily, related to startups, working capital. Okay. That is super, super important to any business, is cash. Cash is king. And what you don't want to have is not enough cash. And so when we are doing startups, I want there to be more. I think there's a standard out there. Most people are getting $75,000 to $100,000 in working capital. I want to put $150,000 plus in there. And the thing is if you don't use it, that's great. That's better for you. Awesome. Congrats to you. You didn't have to use the working capital. You could pay it back down, right? Or you can use it to reinvest within your business. But that is the lifeline of a business, is cash. And so we want to make sure on the startup side that you have enough cash to get you through that ramp up phase until you're breaking even and you're starting to generate some positive cash flow.
Yeah.
And then on a commercial real estate deal, right, the amortization helps play a big factor to it. Right now, you can go from maybe 10 years of an amortization if you're doing a leasehold, if you're doing a practice acquisition, to 25 years. So effectively, you've reduced the loan payment in half compared to what you were doing if you're borrowing $1 million on 10 years versus if you're borrowing $1 million on 25 years. And so keeping that monthly payment low is super important on a large project. Right now, we're going from, hey, you're borrowing $750,000 to $850,000 to now maybe this might be $2 million to $3 million in what you're borrowing. And so that amortization is key. And also kind of going back to what we talked about on the startup project, is that we're going to put another 18 to 24 months of interest only in there to help with that construction phase, which is pretty important. And then another cool thing that is within the SBA product is actually we can budget what's called an interest reserve on a project, right? A construction project, which means we can make your interest only payments on your behalf. So you're really never coming out of pocket until you open up those doors to start generating revenue.
Yeah, which is huge, especially with on my end to kind of marry the two together with what I do in commercial real estate, what y'all do. If I've negotiated, like with a client that I recently worked with in South Haven, 9 months of free rent, like you're looking at a long time before you're actually having to start paying those bills. You get through your construction phase, you get your doors open, and you've got 4 or 5 months, 6 months, 9 months where you're not paying for your operating expenses or your rent. You really are set up for a great success with an amortization type loan like Chandler's talking about and that free rent. You're able to hit the ground running and see that cash positivity maybe a little bit sooner, maybe get ahead on some bills, maybe use some of that money that you were going to use in some of that extra working capital, like you said, to get that extra piece of equipment, to pay down some of that loan, to go ahead and get ahead on some of your debt. There are so many options there that if you can pair those two together with a great quality product like a Live Oak Bank loan with free rent, tenant improvement that you're getting from the landlord, you're coming out way ahead of a lot of these other practices because you had a great agent that negotiated you a great deal. You set up a great loan through a great bank who has a lot of experience, as Chandler talked about. And then you're not afraid of that risk early on. And I want to talk about that because, like, in my mind and, the financial mind, I'm like, ooh, more debt. I don't know. That's scary. More debt scares me, right? Why would I want extra working capital and this kind of stuff? But how should doctors be thinking about that risk when they're taking on that debt early, right? Like looking at it more from the lens of supporting the practice versus I'm just taking out a bunch of money that I may not need.
Yeah, absolutely. Well, I kind of have two schools of thought about debt, right? You could take out debt for like a depreciating asset, right? Not good debt. Not good debt. We talked about that a little bit earlier. Hey, I'm buying a car. Why don't you drive that car off the lot? That car's, it's important to have a car because it's getting you from point A to B, but that car that you bought for $50,000 is now automatically worth $35,000 and will continue to appreciate over time. When you are taking out debt that's going to be revenue generating, that can be good debt. And no better debt to take on than what you're, betting on yourself, right? Which has kind of been a theme in which we've been talking about this whole podcast. If I'm taking out debt for myself, to invest in myself, to invest in my practice, it's going to be revenue generating. I think that's a great type of debt structure. Now, you got to be within the parameters, right? We're not just going to, you just shouldn't take out $5 million because you can, or you shouldn't just take out $3 million because you can. There's got to be that balance of what you really think that you can do out there within the marketplace and what you think is where you feel comfortable in being able to service that debt. And that kind of goes back to, we've been in the business for 16 years, $3.5 billion to the healthcare industry. Only 10 million has charged off. It's actually less than 10 million has charged off. So that's a pretty good track record. So betting on yourself in a very resilient industry is the way that you should be thinking about taking on this debt.
Yeah, love that. Like, it's, again, just another example of betting on yourself. And I don't know about you, Chandler, but there's nobody I'd rather bet on than myself. I'm sure you've already, like I said, taken the steps to bet on yourself. Like I said earlier, going through this graduate program, might as well go ahead and bet on yourself to be successful in business, which Chandler and I both know you will, especially if you align yourself with great teammates along the process, for sure.
Absolutely.
And so as we start to kind of bring this to a close, we're talking about looking at loans. We're talking about SBA loans. We talked about personal guarantees, debt and risk and debt structure. Now let's just like those first conversations. We touched on it a bit earlier, but if you had any kind of advice for a doctor who's looking to finance their first practice, like what are some of your key advice, like statements that you give to clients that come to you?
Yeah. So outside of what we talked about all day today, personal credit side, personal financial side, production, cash flow side, putting the team together. Putting a team together is vital. And so working with the Rustys of the world, working with the Chandlers of the world, there's going to be probably 4 to 7 people involved in these types of projects, right? You got your real estate agent, you got your banker, you got your attorney, you got your CPA, you got your equipment specialist, you might have your consultant, you might have your marketing company. So there's going to be 6 or 7 that are going to be involved in a transaction like this. And so you want to make sure that all of those 6 or 7 have experience and are all aligned together. And so that's super important, I think, for any type of transaction, whether you're looking to just start up or you're looking to expand, because those people that have experience know how to structure these things and know what the timelines are going to be. Hey, I need to negotiate 9 months of free rent. Okay, that's great. Now you got to pair it up with a bank that's going to have sculpted payments, or you're going to have an interest-only payment, and it's going to properly capitalize you to get you where you need to be. And so if you align your team and get the team that's best suited for the field and has experience, I think that's great.
Yeah, and that's huge. I can't emphasize that enough. Like going at this alone, I say on this show a lot, DIY projects are for your backyard on the weekend, not your business. And so trying to do all this on your own, you're going to find yourself in a lot of pitfalls and traps, and ChatGPT will help for a little while. But I recently had a client that reached out to me because they were 30, 45 minutes into ChatGPT of asking it questions and quickly realized, I don't know what I'm doing, and asked ChatGPT, hey, who's a healthcare tenant buyer rep in Memphis? And my name popped up and connected it to, and we were able to connect. But it's just all about having that team. You nailed that, man, from real estate, from lending, from things you don't even think about yet, right? Like an architect and a general contractor and a supplier, and who's your IT company going to be? Are you going to use a marketing firm? Getting with a team and having that team around you is going to make what is a already stressful process, right? Like there's no two ways around it. Opening your own building, your own building and your own practice can be a bit stressful, but having the right team and the team around you that's been down that road, that's done this before, can help ease some of that burden and make your life a bit easier in those early days. So when things pop up, I can point you to Chandler can point you to somebody else, like whoever is on our team that's helping you, being supported. That's a huge part of this, is having the appropriate team around you.
Yep.
And so we talked about mindset shift earlier around looking at good debt versus bad debt, right? Like as we kind of bring this to a close, one more time, Chandler, tell the folks about Live Oak, why it's a great option, why SBA, and who SBA is a good lending option for.
Yeah, absolutely. So I don't think the SBA product is for everyone, or every type of project, right? And so, here at Live Oak Bank, we specialize in different industries, and we go a million miles deep instead of a million miles wide. So we're specialists in that respect. And so there's a lot of great lenders out there, right? There's a lot of good products that fit certain type of opportunities. So, here at Live Oak Bank, we specialize in commercial real estate purchases, usually for the existing doctor. Absolutely, I've helped a lot of doctors who are looking to start up that want to own commercial real estate or do that large ground up project if you're existing. So, I think that's when the SBA can be a really good fit. I think that's when Live Oak Bank can be a really good fit. But at the end of the day, having a conversation with a doctor, I've steered many of them to other lenders and to other places, knowing that, hey, if we take care of this doctor, it will come back around. And obviously we want to get the best product and the best fit for you for that type of project. And so that's what we're going to do here at Live Oak Bank.
Love that, man. Love that, man. I'm going to put you on the spot here. Give me your favorite Wilmington brewery, because I know there's a bunch up there. We used to come up to them a lot. What's your favorite Wilmington brewery?
So mine is going to be Wilmington Brewing Company.
Ooh.
Got the Tropical Lightning, which is everywhere here, and they opened a new one called the Savard, which is downtown now, which is more of a beachy theme, lighter beers. So yeah, the Wilmington Brewing Company, it's a staple here.
Oh, I love that, man. Yeah, we used to come up there a lot too. Wilmington Brewing Company, that one's hard to beat. Flying Machine, High Wire, Waterline, like there's so many good ones, but Wilmington Brewery.
I love Waterline. I love Waterline being down there by the river. They got really, really.
It's probably it's probably the best location, right? Like being right there by the water near that's a solid location.
It is good. But the new Savard one, like Wilmington Brewing, it's like right downtown. And that's like one of the only breweries downtown. Like, nice. So you can go in there and they have a surf. It's like the founder is a big fanatic of surfing. Cool. And so like they have their own little surf area where they're building boards. So it's like in this capsule in this room, and you can watch them while they are sanding down the boards and building the board. So it's like a real beachy vibe and light beer.
That's awesome.
We love that place.
Yeah, man. And then just for a great sandwich downtown, Copper Penny. You been to the Copper Penny?
Copper Penny's still there. The Half is really where the best. So the Half is a good place that they just opened up another one in Wrightsville Beach. It's downtown. It's amazing. And then Cousins Deli. You can't beat a Cousins Deli sandwich. It's amazing. So there's so many good food places and so many good beer places here in Wilmington.
Yeah. I'm telling you, if you've never been to Wilmington, if you don't take anything else from this podcast, like obviously want you to reach out to me and Chandler if you have some needs in a lending, variety. But if you're looking for a great vacation spot, Wilmington is hard to beat, man. It is a unique gem there on the coast of the Carolinas. You're close to a lot, Myrtle Beach, the Outer Banks, the mountains, but Wilmington is just, it's really cool. They do a lot of fun things there. The Azalea Festival in the spring, just a lot of fun things going on. Yeah, it's just right around the corner, right? Should be here next month. Is it this month, right? It's in April, right?
It's like middle of this month.
Yeah. So go check out Wilmington if you haven't before, and also Live Oak Bank. Chandler, again, man, I appreciate you being here with me today, taking time to talk with me and educate me on SBA lending and what Live Oak offers. And hopefully we can do some more deals together in the future. I appreciate you a lot.
Absolutely. Thank you, Rusty, for having me.
Yeah, man, for sure. So again, this is Coffee and Contracts. We're bringing in real estate experts from a lending standpoint like Chandler to help make this process smoother for you. So if you have any questions, if this piqued your interest, if this podcast spoke directly to you and where you are in your personal journey, first of all, like and subscribe to the channel. I'd really appreciate that. Helps me more than you know. And hit me and Chandler up. Our email and our contact information are in the show description below. If you have any questions, reach out. We would love to be a resource for you and have those conversations to launch you successfully into your own practice. But for Chandler Wright and Barry, I am Rusty Whitten. Thank you again for joining us on Coffee and Contracts. Go be a friend to somebody who needs a friend, and we'll see y'all next time.